I'm here to talk about the three price action trading mistakes that most new traders are likely to make. So, here I have a chart of India Cements. It's a 1 day chart, and basically it's on the daily time frame. And if you see here that the price has been consolidating for quite a bit here, and the price came down. We had lower highs and lower lows, then we had higher highs and higher lows, and then price seems to be consolidating right about in the same range. If you see here, it's kind of like the same range. If you see, by and large, price is swinging up and down in this range, and this is for the last around 2 years plus. If you see here, I'm here in April, and we are now in July, right? In August. So almost like 2 years plus, right? 2 years and some months. Now, uh, what happens with price action traders, especially newbies, is that they don't know price action in its entirety and they just chase the markets. So what they'll see basically is, I'm going to remove this here. I'm going to remove this here, and if you see, they see that this price that there is a candle here, and they've got huge volumes in this candle, and they decide to basically make an entry after this candle. Now, this candle basically is the 27th of June candle, and they, for example, decide to go high above the high of this candle. So, what they'll do basically is the high of this candle is 298.80. So, let's suppose they go in at 300. They decide to go in at 300 because they've seen that this is a candle, and now basically they shouldn't have taken an entry in this candle simply because where are you going to place your stop loss? This is a gap up candle, but they have not considered the gap. What they've just considered is basically that this is a candle. I've got huge volumes here. Volume is 145 million compared to the 20 period volume of 16. That's almost like 10 times the volume. So they decide the price is in a strong uptrend and price is broken through, and it will be good to go in the trade. So now, where are they going to place the stop loss? So I presume that they will place the stop loss here at the low of this candle. This candle low is 275.10. So they will place it at 275.10, or even for that matter, let's say 275. And now what has happened is their order has gotten filled and price has come down and basically taken their stop loss, and then price has gone in the direction that they hoped for. So they should not have taken an entry because this is a gap up, and just see the distance between this candle and the EMA and the 9 EMA. Where would they place a stop loss? And they've kept it at the low of the candle so that they have a good risk reward ratio, and they were probably hoping for at least 1 is to 2. That's what everybody tells them, that always go for 1 is to 2, 1 is to 3, because you are doing swing. This is not intraday. So 25 here, and they probably had a target of 50 rupees here. So their target would be somewhere, say somewhere here at, let's say that they put a 1 is to 2 target, and it would have been achieved but for the fact that they entered on the wrong candle. Their stop loss was bad, because now where will they keep the stop loss? They did not allow for any room. They kept at the low to keep their SL low, and keep the SL tight, and they want to go for 1 is to 2, which they would have, but the stop loss is basically price is retraced because this is a kind of exhaustion gap, and price has come down for a bit. It's taken support at the 9 EMA, and then it's gone up. So had they, let's see, now the ATR at this point is 13.25. So 13.25, or let's take it as 13. So they should have kept it at 262 or 261.75 or something. Now 261.75 is still far, far above the EMA 9 of 245. So, but still, had they kept their SL at 1 ATR below the low of this candle, that would be around 262. So I'll place this. This will be 261.75 or something, right? Like I spoke about. So their SL would have been here, still above the 9 EMA, but still it would have been a decent SL. Then they would have still believed in that trade, and they would have made this. So there were a couple of mistakes by the newbie trader. They went in for any candle with good volume. They kept a very poor stop loss which was at the obvious region. And even if it was at the obvious region, there may have been a chance that they could still be in the trade, but this was an exhaustion gap candle. So there are various types of, there's a breakaway gap, there is a continuation gap, there is an exhaustion gap. So this appeared to be kind of an exhaustion gap, and price is retraced, the SL was poor, and they're out of the trade. Now, whenever let me go to another chart. So there are two problems here, right? One is basically they're chasing the market, taking entry at just about anywhere based on something that they've learned on YouTube. They don't have entire knowledge. Their stop loss is also incorrect. So these are two mistakes that you see. Now the third mistake. Now let's look at this chart of Chaman Lal, right? It's on the daily time frame, and let's suppose that, for example, they decide to go high on they decide to go high somewhere. Let's say they decide to go high on the top of this candle. So I'm going to place, now this has not happened as of now, but this is a hypothetical. They decide to go long here at the high of this candle, which is, candle here is 257 and it's 257, right? So they decide to go at, say, 257.10. Now, where would they keep their stop loss? Now, stop loss will be minimum below the low of the candle. You got to keep some stop loss, right? So you're going to place your stop loss here below the low of this candle. Now you kept your stop loss here below the low of this candle. The low here is 236.50 and it's 236.50. So let's say you even take a buffer here. Let's make it 236. Right? That's what a newbie is going to do. So 36 minus your entry, which is 21 rupees 10 paisa. So now what do you want? You want at least you want at least 1 is to 2. You want at least 1 is to 2 stop loss. I'm going to zoom here. You need at least 1 is to 2. So if your stop loss is, say, somewhere here, right? And let me make this, if your stop loss is somewhere here, you want at least 1 is to 2, 1 is to 2 reward ratio. Let me close this, make this chart here. So 1 is to 2 basically would be somewhere like, this reward ratio is 1.2. So we need to increase it to at least at least 2, right? This is what everybody is told, right? You're doing swing trading or you're doing intraday, you have to be 1 is to 2. If you're 1 is to 3, 1 is to 4, it's even more better. So you, for example, have put in an order here. Of course, it's not gotten filled here, but assume that you'll get filled here, and you have a nice juicy target. It's very juicy at 298, 1 is to 2, and everybody is happy, and you're going to make some money. But what you fail to consider is there there are resistances here. There are resistances here. This entire area is resistance, meaning that there are sell orders here and prices have bounced off here earlier. So forget 1 is to 2. You are not going to get even 1 is to 1. This is resistance. So the moment the price hits here, or at the most here, somewhere in this region, price is going to basically come down. Why am I saying come down? Why am I so confident? Price has gone up, come down, touch, gone down, come up, bang, back, selling pressure, selling pressure. So this is an area where either long-term investors or smart money think that it's a good place for profit booking or it's a good place to place short orders or sell orders. So it could be investors or big money taking, or there are lots of sell orders here, and this resistance is holding good so far. It's holding good from 3rd January 24, and right now we are in August. So forget 1 is to 2. If you've kept a target here and your SL is here, now I have already explained about keeping an appropriate SL, so I will not go into that. Whether your SL gets hit and the price moves in your direction, chances are that you are not going to reach here because the price will bounce back from here. So in such cases, blindly going in for one is to two will not help. You need to look at the entire chart. You need to look at supply zones, resistances. eh, You have to look at basically everything. You just cannot say, I'll keep 1 is to 2 SL and I'll get it. The market doesn't give a damn whether you keep 1 is to 2, 1 is to 3, and where your stop loss is. I'll not even go into stop loss hunting and those things because I've gone into those in earlier videos. But if you take an entry like this, 1 is to 2 is not going to be achieved. Your target should have been somewhere before this area so that you would have got a target. And obviously, if you knew to keep your target somewhere before this, you wouldn't have bothered to take an entry here because you're not going to go for a 1 rupee target. So this was the wrong candle to take an entry in because you have obvious a big supply zone or resistance here, and 1 is to 2 will not be possible. So if you go for a ridiculous entry, if you keep your stop loss at an absurd place, it's likely to get hit. If you go for 1 is to 2 blindly without looking at everything on the chart, you're not going to succeed. So these are the three trading mistakes that newbie traders do. If you want to basically have a good entry position, a good target, and a good exit, you must know price action. For that, you need to invest in your learning. I hope you learned something good. If you like this video, if you have any questions, please write in the comment. If you want me to post a video on another topic, do let me know. I hope you had a good learning. Click on the subscribe button if you haven't subscribed. Click on the bell notification to be notified of new videos. I wish you good trading, and I'll see you in the next video. Thank you for watching.